Well, good afternoon, everybody. My name is Sam Cates, and welcome to our webinar on advisory services. I am shareholder in charge of our client accounting services department here at JRBT. Been with the firm about 10 years. I've been in public accounting about 22. I was an auditor for a little while. I'll be asking some questions today during our live webinar, and I'll be asking those to Susan Bullock, one of our managers in our client accounting services department, and I'll let Susan tell you a little bit about herself now.
Sam, thank you. I'm really excited to share with everyone what we've been working on in advisory services today. I am a manager here at JRBT. I focus on advisory services, business valuations, forensics, and litigation support. In my professional career, I've had the opportunity to work on both sides of the desk. So currently I'm a CPA in public practice, obviously, with JRBT. I've also had the opportunity earlier in my career to work in industry as an FP&A or financial planning and analysis manager. So I've had the opportunity to see it from both sides of the desk. I really enjoy looking at the numbers, finding the story, and helping tell that story to support business decisions.
Excellent. Thank you, Susan. I think it's probably time just to jump right on in and ask our first question, Susan. So we've all heard this term advisory services, go over what exactly does that mean from a CPA firm, from an accounting perspective, and what type of services actually fall under that umbrella.
Right. So advisory services can mean a lot of things to a lot of different people, and you hear a lot of things grouped under that term. You can be anything from implementing some robust management reporting to even CFO services, and really everything in between those two things. Today, what we're going to do is we're going to focus in on a couple specific services that fall under the advisory services umbrella because we think that they can add a lot of value to our clients in the current environment. And everything that we're going through under the current COVID situation. So those services that we're going to look at are the business intelligence reporting or management reporting and automating that reporting so that you have greater visibility to make some key decisions. We're also going to talk about some KPIs or key performance indicators that are typically a component of that reporting, and then cash flow scenario planning. So really getting some enhanced visibility around cash over the next 3 to 6 months as we continue to progress through the current cycle that we're in. But with everything that we're talking about today, and really with advisory services, the goal is enhanced visibility and driving additional performance in the company and decision support through data analysis.
Excellent. So how is that different service? How is that service different from what we would traditionally see with JRBT services?
For sure. Traditionally, with an accounting firm, the financial statement is the deliverable, or historically has been the deliverable. But with advisory services, that's kind of really where we pick up. And so we pick up once the books are closed, once the financial statement is ready, and we put together additional metrics, one of those being the management reporting that we're going to spend some time on today. And once again, we're putting together those reports in order to support decisions and drive increased visibility throughout the company on how the company is progressing and the health of the company in the current month or year that we're looking at.
Okay, so in other words, maybe we're looking more towards future trends, future growth for the company instead of what we've historically done and looking at a report that shows you what happened 3-4 months in the past.
Absolutely. Absolutely. We're really driving to impact those future decisions and to provide management with the information that they need to make those decisions.
Excellent. So one of the first things you mentioned was business intelligence reporting or management reporting. What exactly is that?
So management reporting, once again, is designed to be a tool. So it's a tool that typically supplements the financial statements. It has data, the same data in it from the financial statements, but usually it's presented in a different format and it brings in additional elements as well. Typically, you'll see it bring in budgets, you'll see it bring in targets. But some of the key elements that we want to emphasize in the management reporting are, the company's key metrics as performance indicators, how is the company doing? And these are the strategic things that, similar to when you're driving your car, you would look at the dashboard of your car to kind of get an overall gauge of how things are going. This is the same thing with management report. Typically, that first page is your KPI dashboard. And so you can look at it at a glance and kind of see how is the company doing. And another thing we want to do with the management reporting is provide that context. So for example, on that KPI dashboard, we wouldn't just put a 10, we would put the 10 in context of the last 24 to 36 months. So you can see that trend and you can pick up on those trends and know, a lot more insight than just a static number, and that's the same thing with the budgets and the targets. You might see a target on the KPI dashboard as context as well. And that's really all to provide that quick glance, kind of how am I doing in context of where I expect to be or where I need to be. And then as you flip through the rest of the report, it's going to go into a lot more detail than what you see on that front kind of dashboard or KPI, but it's going to show you things like the income statement variances, how are you doing versus budget? How are you doing versus last year or last month? And then another thing, especially in the current environment, we all know cash is king. And so one of the things that we're really driving towards is giving you that clear picture of cash. How much cash is the company generating? How much is tied up in AP? How much is tied up in AR? So really kind of working through that cash cycle.
Okay, so you mentioned KPIs, key performance indicators. Can you expand on that a little bit? What are those for a company?
Sure. And so, the very basic definition of a KPI is a metric or a measurement used to monitor performance. But I think the key thing to remember here is it's tailored to the company. So you want to identify those things that really define profitability for that specific company or that specific industry. So if you were looking at a professional services industry, it might be the revenue generated by professional or the wages ratio to your revenue. If you're looking at a manufacturing organization, it may be something more like your contribution margin per unit or your days in inventory. So once again, these things are very specific to the company because they are the things that are strategic to the heart of that company and driving the profitability for that company.
So a company might focus on those key performance indicators that drive it to success, to profitability, but maybe even also some of those KPIs that help them with some of those pain points, some of those areas that aren't performing well that they need to have improvement in.
Absolutely. And that's, I think, in the current environment, we've seen a lot of companies, will pull cash forward to that KPI. Maybe liquidity isn't an ongoing day-to-day concern typically, but in the current environment, it's something that you have to pay a lot more attention to. So we'll bring that forward maybe for a temporary time and then, put it back as things go back to normal.
Right. And how many KPIs should a company be focused on? Are we talking 10, 20, 100?
This is definitely an area where less is more. So, typically what we're going to recommend is 5 to 6 KPIs. We don't want you trying to keep track of hundreds because then they lose their importance, right? And sometimes it'll even be 2 to 3. But it all depends on the company. But really no more than 5 or 6.
Okay, and how often would you recommend, in your experience, that a company goes through these dashboards, through these reports, through these KPIs, and really gives them a really hard look?
And so this will all depend on kind of the tempo of the company and the operations. But what we're recommending is that you look at it monthly. You definitely want to be looking at it often enough that you're staying attuned to what these numbers are. And if you go too far in between, you're going to miss the opportunity to pick up on changes in these trends that might exhibit themselves. And the earlier you can see that, the earlier you can get on top of that. Additionally, a monthly cycle, when you're talking about financial data like we are today, it allows you to complete that month-end close cycle so that you're looking at high quality data. Because obviously when we're generating these reports, the quality of the data is definitely going to impact the analysis, and we want to make sure that the data going in is of the highest quality available. At JRBT, our model is to sit down with the client on a monthly basis once that month-end close process is finished, with the financial statements are ready, and go through the analysis and the report with them at that time.
And it always does help, regardless of who that might be, for an advisory services to have somebody advising on that, new eyes looking at the information to help you with that. That's good. You did mention in BI reporting that it uses budgets and targets. Not all of the companies out there have budgets. Do they have to have a budget for this to be helpful information?
Absolutely not. We would like to get there, and we'll work with our clients to get a budget in place if that's something that they want to move forward with, but it's not something that should be a gatekeeper. So it is definitely something that management reporting is something that you can move forward with without that budget in place, because there's still a lot of things that you can gain by looking at the year, current year versus prior year versus the month trends. You can do some things. You can put in a target even if you don't have a full-scale budget. There's still other things that you can do, and you can certainly gain a lot of data without that budget element.
And you mentioned budgets and targets. Those aren't the same thing, right?
No, those aren't the same thing. Typically, a budget is more for fiscal controllership. So really, a budget should be your 90 to 100% confidence plan. That's what you're really, controlling to. Whereas targets are a little more of a stretch goal. So you might set a higher sales target than you're going to have in your budget.
Okay, excellent. I think that clears it up. So you also mentioned cash flow scenarios, and I know that we've traditionally provided cash flow statements. And in our previous discussions, that's a historical information. Cash flow scenarios, those are a little different. How are those different?
Right. So with the cash flow scenarios, and it's really something that I think is very important at this juncture in time. What we're trying to do is create 3 scenarios of a short-term horizon, typically 3 to 6 months. And so we'll lay out those 3 scenarios. The mid one is kind of your most likely. So based on what we know today, what is your outlook sales production over the next 3 to 6 months? And then we'll take a higher case and a lower case. And what we're trying to do is create that band of possibilities. And so when we look at those cash flow projections, we can look at kind of that band, and we can identify what are your key activity levels. You can see, where do I need to be operating to break even on a cash generation basis month to month. Also, you can look at it and say, where are my points of liquidity that I need to be keenly aware of, and I need to be managing this very acutely. I need to be on top of it. Or, best case scenario, you can look at it and say, I'm doing okay. I don't have any particular points where liquidity is going to be my top concern. I can focus on driving my business and doing some other things. With the cash flow scenarios, what we like to do is we call them activity-based or activity-driven. And so what that does is we work with the company to, put these scenarios into their day-to-day operating language, for lack of a better term. And so, be it number of units that you sell or number of patients that you see, these cash flow scenarios will be based on those activity drivers. So if it's units times ASP, then you'll know in each one of these scenarios, these were my projected units on a month-to-month basis. And so even without getting those closed financials, hey, if I built my scenario on selling 100 units and I'm at 75, I know I'm under that scenario. And so we know that we need to go back in and retweak, or we know which scenario we're lining up closer to. But the idea is to give you that picture, once again, for visibility, so you can get on top of it and know where those key points are that you need to be aware of.
Awesome. Okay. Well, I think we've talked a lot about it. How about we show some examples of some of these dashboards you mentioned? We can go through those a little bit and touch on a couple of those individually, and we'll take a look at those right now.
All right, that sounds good. So the couple slides that we're going to look at today are actually generated with a software called Spotlight Reporting. At JRBT, we're going to use a couple different softwares. There's obviously a lot of different things on the market. This was our go-to for today, and so the slides that you see are produced out of that software. The one that's showing on your screen currently is one that's taking advantage of the fact that the company is tracking several different regions. In this case, this was a QuickBooks file, and so it was tracked by class. And what we would look at is the differences in those regions with this type of analysis. And so you could see that, you know, one of the regions is performing better than the other. Additionally, one of the things we would look at, like on the gross profit percentage graph, the one there in the middle, is you can see that Auckland and Northland, the gross profit margin is staying pretty consistent across the mid time period there. And then it takes a dip, whereas Wellington, you know, is more of kind of up and down. So we would want to understand what allowed Auckland and Northland to maintain across that midpoint, as well as then, you know, understand what happened to cause the dip at the end. But we would also want to understand the differences between the operations in the two locations. You know, perhaps there are learnings from one location. If we see that one location is consistently operating, you know, better than the other location, then are there opportunities for information sharing across the two locations? So maybe there's some operations processes that need to be rolled out more of a company wide.
Yeah, and Susan, just real quick on this, I wanted to ask: are these boilerplate or are these customizable for the companies?
These are customizable, and so what you will see for your company would look very different from this company. You know, this dashboard, you know, it can also, even for this company alone, you know, could be consolidated. So we could look at the revenue for the total company. We could look at gross margin trends for the total company. We can also look at some of those unique KPIs that you define, you know, so revenue per professional or wages to revenue if you're in the professional services industry, or perhaps contribution margin per unit if you're more of a manufacturing type. So these are all very customizable, both from the input that's going in, what we're tracking, and then the look and feel is also something that's very customizable. But the intent, again, is to define the reports so that they're a tool for your company and answer the questions that you're looking at as you're driving your operation.
Excellent. Okay. And I think on the next sheet.
Yeah, this next slide is actually more of a detail slide. And so this is a sample page that you might see in your report. It starts with the year-to-date actuals, and then it goes across. In this case, this company didn't have a budget. If we saw a budget, you might see the variances there to the budget. In addition to the year-to-date variance that's showing there, you also see kind of the last 3 months, and then you see a forward projection. Really, the idea with this type of analysis or this type of presentation is to understand where you have the gaps. You know, so if it's to budget, where am I not meeting my own expectations? If it's to last year, you know, are there unfavorable things to last year and why? You know, are there favorable items and why? But really understanding where those gaps and expectations are, or the changes in the trends. And you have to understand that before you can really look to the far right, you know, which shows where do you expect to be for the year. And so in this case, it's saying, here I am year to date, here's the rest of my year's budget, or where I expect to be for the rest of the year. So this is where I would expect to be for the year. And so we have to use the analysis, though, coming up to this point to know, you know, if there needs to be any changes to that remaining year's budget to allow us to interpret that total column as where we expect to be. Okay. And once again, very customizable. You know, this can be a quarterly profile. This can be variances to budget. Can also look at things like fixed and variable cost profiles as well with this type of analysis.
Okay, and the next slide, I think, is going to show, yeah, this is one of my favorites. This is a different way of looking at cash movements.
Right. This is one of my favorites too. So this is really a pictorial view of the cash flow statement that you're traditionally looking at. And so what it shows is all your cash collected for revenues and then your uses of cash. And this particular company, it doesn't show, but you would also see things like changes in AR and changes in AP. And I think, you know, as we've worked with clients, sometimes those can be a bigger use of cash than you might expect, and it depends on what period you're looking in. But I think, a chart like this, it makes it very obvious what those changes in working capital are and where your uses of cash were to get you down to your balance there and your net cash flow for the company. And so this is something we definitely look at. Like I said, it's always in there, but where there might be other cash analysis that goes along with it at this juncture, given where we're at with the COVID situation.
Excellent. Right. All right. Well, thank you for going through that. I appreciate it. We do have a question that came in, and I think it's an appropriate time to address that. It's a client saying, I have multiple companies that operate. Is there a way of using this tool to show the different companies and how they're performing against each other?
Absolutely. So just like we looked at the earlier slide that showed the different regions, that's based on a class or department. We can also use this tool to consolidate, and not just this tool, some of the other tools out there as well, where you have multiple companies owned by the same owner, or maybe multiple franchise locations. We can bring those companies in. We can either give a consolidated view, or we can give a consolidated view and then show those financials side by side as well. So you can take, once again, kind of looking at all the different operations and see if there is something that, might be transferable between the locations that would benefit the group as a whole.
Yeah, and I wanted to emphasize one of the main parts about this is it doesn't just identify issues, but it allows us to come up with some actionable steps that we can take to fix it. So for instance, if one company is doing really well, the other company may not. It may identify some training or some efficiencies that we might need to do for that one company in order to get them on the same track.
Absolutely. So yeah, and another actionable item, actually working with someone earlier this week, in the services industry, one of their KPIs is revenue per professional, where they were looking at, what type of growth plan do they need to put in place for next year, and how many people would they need to drive the revenue target, and using these KPIs and looking at the historical trends, that was able to inform even headcount and personnel planning for next year.
All right, and I got another question that came in, and I think it's a great question. We typically think of budgets as being an income statement sort of an issue, but this question is, do I need a budget for balance sheet?
Yes, it helps us tremendously if we put in a budget for both sides, for both the income statement and the balance sheet. If you don't have one right now, it's certainly something that we can assist with, and we can help you get that budget for the balance sheet side put together. But the reason we want it is largely that cash cycle. So it's kind of taking, the income statement a little bit further and understanding, what uses of cash or sources of cash you might have in your working capital, and then also looking at your debt service payments, if that's applicable, and so that you can really understand what your cash requirements are and what your cash generation is going to look like over that period of time.
Excellent. I think we have time for another question. This one looks like it might be a nice long one. So this question is what does this type of reporting give to the clients that the typical financial statement hasn't already given them in the past?
Right. So, once again, the intent with these reports are to really tell the company's story, kind of what's going on in the company, what do you need to be paying attention to, where are things meeting expectations, where are they not, diving in and giving you that visibility to drive the company and to make those decisions. We also have a lot more flexibility in this type of reporting because it's a management report versus a traditional financial statement that has a very specific layout and very specific order that it goes in. For example, we're working with a client and they make large bonuses to the owners that are expensed every year. Well, if we're looking at our income statement with those bonuses in there, our profitability is really skewed. It's hard to understand what the true profitability of the company is if the bonuses that are paid out to the owners are included in the net income. So what we're able to do with something like this is look at the net income without those bonuses, put those at the bottom, right? So I can kind of walk down my income statement and say, here's my operating income before bonuses and before, in this case, taxes as well were on there. But it kind of gives you a little more insight into the true profitability of the company without mixing that with compensation that's being paid to the owner or being bonused out.
Yeah, I've seen that graph that you're referring to, and skew is an interesting word because it definitely really doesn't look right when you do that, but it's perfectly right, and it's interesting. All right. Susan, I don't have any other questions for you. Got anything else you wanted to say before we wrap this up?
No, just thank you for joining us today. We would love to engage with you to talk about it a little bit more. Like I said, throughout the presentation, these things are definitely custom to the company. Every company has its own operating processes. They're kind of at a different place in the FP&A cycle as far as putting in budgets and as far as doing variance analysis and KPIs. And so, we'd love to sit down and talk with you and kind of see where you're at and see where we can jump in and help out.
Yes, absolutely. You can reach either me or Susan at JRBT and call the main line, or you can go to the website and find our email addresses. We will have this webinar posted on Facebook, and if you need to go back and rewatch it, but we are really excited that y'all were able to be with us today and really thankful for this opportunity, and look forward to talking to you and sharing with you any more information about this that we can. Thanks again for joining us, and hope y'all have a wonderful 4th of July weekend.